Ryan Payne is with me this weekend, the president of Payne Capital Management, $700 million in assets under management. In addition to managing the day-to-day at his firm, Ryan is also involved in educational initiatives to inform the public about the importance of goal-based financial planning and investing. And Ryan, it is good to have you on the program.
Thanks, Maria.
It's so good to see you. So this market has been on fire, obviously. $5.3 trillion in market value gain since Election Day. Are you investing in stocks as we speak, even with valuations where they are?
Yeah, I think that's the big misconception right now is valuations are so overvalued. They're maybe slightly overvalued, but let's face it, companies are, or the market's a slave to earnings, and earnings just keep coming in better and better. And, if you look at corporations right now, their projections are even better. So I think the reality of it is we're kind of in a golden age here where the economy is strong here, it's strong abroad. And you have low inflation, which is it doesn't get better than that, Maria.
Yeah, so where do you want to be allocating capital? You use exchange-traded funds, ETFs. Tell us how you pick what you want to own.
Well, I think you want to be global right now. The global economy is doing really, really well. It's not that just the U.S., and you talk about valuations. Valuations overseas are actually probably even on the cheaper side with growth rates that are even better. So you definitely want to have money allocated everywhere.
And so emerging markets have been showing some strength. Europe is looking a little better.
Yes.
Actually, for the first time in a long time, you've got the global economy moving in step with one another, each different economy.
Exactly right. So you have synchronized global growth, which to me is, if you're an investor, it's hard not to be really excited about being invested right now at any time, in history.
All right, so here we are. This past week, we got a tax plan from the House Republicans. We're going to hear from the Senate in the next couple of days. They're going to have their version. What did you think of the tax plan? And then we got to get into jobs, which Friday, of course, saw another growth number in terms of job creation for the month of October.
Yes, we're down to 4.1% unemployment, so that's great. And I just feel like anything that gets passed on Washington is just gravy at this point. The market cares about earnings. I think earnings are going to remain strong. So if anything gets passed, which might be a miracle at this point, that'll just be fuel for the fire.
I thought it was interesting that when you look at what has happened in the market already, and we haven't even seen actually a definite situation on the tax plan. So when you say gravy, you think the markets have an opportunity or potential, a runway to rally even further when this thing passes?
Potentially, or could already be priced in. I still think you got to focus on earnings. I think all the other things that you're hearing about it's kind of noise. If it does get passed at this point, who knows? That might already be priced into the market. I wouldn't wait for the tax bill to get passed to get invested, I guess, is the bottom line.
When you got the jobs number out on Friday, you could see a mixed reception, because some people wanted a lot better than 261,000. They were expecting a 300,000 number. But what does that mean for the Federal Reserve? Because we are expecting that the Fed's going to raise interest rates in December. And, of course, you've got another Fed chief on the way.
Well, I think the Trump administration has made it really clear they want to keep rates low, and we're not seeing any sort of huge inflation. We have low unemployment, but wages are just not skyrocketing. So I think, this confluence of low inflation and very good economic growth globally is just, that could continue for a long, long time.
The complaint with the jobs number this past week was wages.
Yes.
Wages are not moving. When are we going to actually see wages move higher, which, of course, is so important to the American people? That's why they're living paycheck to paycheck. They're not making enough money.
Yeah, I think at some point that has to kick in, but I don't think it's going to be snap of the finger all of a sudden wages skyrocket. I think it's going to be slow and steady, just like the growth of the economy has been. So it'll be a slow rise in interest rates as opposed to some sort of big bump that everyone's afraid of.
So impactful that we're going to see another rate hike in December? Do we care?
I think it's kind of insignificant.
It's still low.
Right. Exactly. It's still extremely low. So it's not something. It's already priced in, right? It's about an 80–90% probability they're going to raise rates. So the market's way ahead of that.
Your thoughts on Jerome Powell as the new chairman of the Fed? Is that going to be steady as she goes, same as Janet Yellen?
I think he'll do exactly what Trump says, and I think the Trump administration wants low interest rates. He'll follow suit and make sure that everything happens in a very measured, slow, conservative way.
Well, are you saying the Federal Reserve is not going to be independent?
I know it's shocking, Maria, but yes.
Wow. Okay, so you think that they're going to be in step. Well, we'll see about that. That would be criticized, obviously, if it's not independence coming out of the Federal Reserve.